Here we go. We got moments till the close, and the markets are surging. Is this the stimulus rally, the Roger Clemens rally?
Don't say it's a Clemens rally. Let's hope not. At any rate, it's doing great. We're up 181 points right now. NASDAQ is where the real story is. It's up in 2.25%, up 51 points, almost 52 points. So there's a lot going on. Higher than expected retail sales last month. That's getting a lot of the credit here. The rally continues. Let's throw it to our panel. Eric, why?
Well, I think it has a lot to do with stimulus. Number one, the retail sales numbers were great, which I'm attributing to some people going out and spending
like
their
your
stimulus.
cufflinks, by the way, which are marvelous.
Thank you very much.
So. They are.
Some great earnings. Deere had nice earnings. First Solar had nice earnings. There's some really good earnings
Although
reports
these solar
coming out
stocks are kind of overpriced.
Liz and I
were talking about that.
They're getting very rich.
rich.
You're talking to the oil guy who doesn't like the solar stocks at all, but nonetheless, they're making some money. You have to say, give them credit for that. A lot of good things going on in the economy.
What do you think is the number one good thing that's helping enough to make a market rally today? And I know one day does not a trend make, but we look pretty good today.
You know, I always use this analogy. I think that Wall Street is like a 14-year-old boy. The Playboy magazine is about this far, and I do believe that this dumb stimulus package, which will not work probably, is getting people excited about it. If I'm on Wall Street, I'm buying for about a day and a half and getting out.
Gary Oldman in the Dracula movie. I was wondering where I'd seen you before. That was it. Take a look. There he is, Tom. All right. Yeah, okay. Peter, is there anything about this market that you trust right now? Because it is a big surge today.
Well, look, I mean, again, bear markets have rallies. It's a bear market rally. People get short. They cover. I mean, sure, and when the market starts to move against you, the short traders, by definition, they're there for the short term. They're trading the market. And, you know, they're going to buy if they think the trend is reversing. But, you know, the fundamentals for the market are lousy. It's a bear market. The market's going lower. And even if it's not going lower in nominal terms, it is going lower in real terms. Look at the value of the dollar. Look at the price of gold. Exactly.
Gary Kaltbaum, you were just saying in the last half hour, bear market rallies, things like that. Are you in agreement here?
As of right now, yeah, I have not seen the conditions, and I really haven't seen strong, compelling volume by the big institutional crowd that tells me really anything's changed. But I think you're getting a rally here. I think you're in the no-news period for the NASDAQ. But I got to tell you, I'm noticing Tom, he let his hair down.
Fabulous.
What is it happy hour time already? Or
That's my request by some lovely lady in the green room.
You wouldn't notice.
I don't want to take any attention away from Tom's hair right now, but I'll tell you what really turned these markets around yesterday when Warren Buffett came out and said, listen, I think I'm ready to step up and look at $800 billion worth of muni bonds to insure. By the way, guys, to reinsure. Right, I'm sorry, to reinsure, which that is when the market turned around. You watch the market, immediately the market went from slightly lower, took off like a rocket yesterday. He came out
before the bell futures.
Yeah, and he came out today and he reiterated this morning, along with some good earnings. These things are important to the market. Let me just tell you, the one thing that people are talking about right now, that 3-month LIBOR rate, which is the rate that companies loan each other money at, has shrunk. It's come down, and that means credit markets may start to move a little bit. So these are all really good signs to me.
So I'll play a questioner here. We have 3 people here, and besides me, I'm curious. How long of a rally is it? We got 173 points today so far. What do you guys look at? I'm looking at a day or two. Maybe I'm wrong, but what are you guys thinking?
Gary clearly thinks it's short term. Eric?
A day or two? I mean, I'm looking at 3 months from now, 6 months from now. These stimulus, forget stimulus. These lower interest rates will eventually work its way into the economy. The banks are going to make a lot of money with lower interest rates, and that's going to show up Q3 and Q4 of this year. I look to buy good companies now.
I don't know how much money they're going to make. You know, I don't think they're going to loan that money back to American consumers to buy houses or buy automobiles or to buy anything. I think they're going to take that cheap money from the Fed. They're going to send it abroad. They're going to buy foreign assets. They're going to buy commodities. They don't want any more of this stuff on their balance sheet. They've got too much of this paper that is of questionable value.
But Eric, you just said you're buying good companies. What are you buying?
Well, I'm actually buying. I bought a lot of Citicorp recently. I bought a couple of the names in the financials that I've stayed away from for a year and a half, only because I really believe as you bring those short-term interest rates down and they go ahead and loan them out at higher rates later, they're generating capital. These financials, in my opinion, are a buy right
Gary,
now.
Be
How
happy
do
to
how do
know
you
that
buy-
they're up today, by the way.
Gary?
How do you buy a company that you have no idea what their earnings are going to be? You know, Citigroup, Citicorp, whatever their name is these days, has no idea what their numbers are. They keep every 2 months are coming out with more and more losses. We just got it from AIG, and I just think there's more to go. I think, you know, you may get a trade out of them, but as an investment, I think there's a lot to be worked out, and it's not going to take weeks.
Well, we have a rough idea now. It was hard to get a handle on it for the subprime mess for a while. We have a rough idea that we're roughly halfway through it, or
I
maybe
don't think
better.
so.
You don't think so, Peter?
We have no idea what these assets are
But the
worth.
consensus is we're roughly halfway through the thing
Well, the
right now.
consensus is wrong. The consensus didn't even see this coming. You know, remember,
That's a great point.
We're
That's a
in
good
a
point.
bear market. We've been in a bear market. Go back to 2000. The Nasdaq was at 5,000. Gold was under $300 an ounce. Here we are 8 years later. Gold is over 900, and the Nasdaq is less than half of what it was.
But the reason why gold is going, I mean, look, you and I have a different opinion on this. I see the reason why gold and energy both are going up is because you have this worldwide economy that's growing like crazy. And gold, well, I don't think we're going to disagree on that. And when that happens, energy costs are going to go up, and therefore energy stocks will rise overall, and so will almost all of your metals, especially
we had
gold.
economic growth in the
This
90s.
actually all comes to a point when you talk about platinum. Platinum went over $2,000 an ounce today. It pulled back just a bit, but this was all on the fact that all of those South African mining operations can't get enough electricity. And so their
That's
operations
just
have to
now,
be
Liz.
shut
That's not
down.
for the last 8 years. We've been in a bull market for a long time.
Well, we've been in a commodity bull market for about 8 years. Peter's right, but we spent the 90s being in a commodity bear market.
right.
If you
That's
want to
over
think the
now.
90s,
The economy grew.
right? But the economy grew, but also from 1990 to 2000. I can't even think of a commodity that went up in price during that 10-year period.
No, they didn't.
Now, since 2000, they're off to the
Let
races.
me just ask you,
Very-
one thing that most people here, I think, agree on is that Greenspan made a mistake of keeping rates so low for so long. That's part of the problems that we're working our way through right now. But do we have to go through a real contraction in order to squeeze that inflation out of our economy?
No, look, this is a Greenspan-Bernanke recession here. This is caused by these guys, first of all, bringing rates down too slow, then keeping them down too long, then bringing them up too fast. You went from 1% to 5.25% of Fed funds rate. That crushed the real estate market.
Gary Kay, last word, 10 seconds.
Yeah, just getting back to gold, it's up because of one word, inflation, and anybody who thinks otherwise has something coming to them in the future.
All right. there
Eric
we go.
raised his hand, but we'll have to discuss that for another